I'm going to share with you a clip that came out yesterday, and I don't know, I think it's going to piss you off. You check it out.
I'm sorry that people listened to what we'd said and acted on that and now find themselves in a position they don't want to be in. But at the time, we thought it was the right thing to do, and I think looking back, we would have chosen different language.
Okay, let's deep dive into this and see exactly why this is an issue, how we can learn from this, and what we need to know for the future when these guys talk again. If you guys are interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, what I just showed you was a clip from when the RBA Governor Phillip Lowe had addressed the Senate, and he basically went on to say a bunch of things along the lines of the fact that I apologize, and a direct quote is, "I'm certainly sorry if people listened to what we said and then acted on that and now regret what they've done." Interesting. Now, rather than just focusing on the fact that he apologized and there was so much wrong with what the RBA was saying at the time, and have continued to say, I want you to stay till the end because I actually want to bring you guys value from this video. And I think it's a very valuable lesson for us to learn, especially for 2023. When I believe the big economies in the world, like the US, is going to go into a recession, and the fear mongering that's going to be in the media is going to be next level. So it's very important to stay till the end. Now, if you're watching this, you're probably interested in personal finance or buying real estate, and you will definitely remember when he came out, Phillip Lowe, last year and said that, hey, you know what, rates aren't going to go up till 2024, and as a result of that, you should go out and take out some loans. He didn't say that last part, but that's basically what people interpreted. And that was what led this massive FOMO run in property, because we all believed that as interest rates drop, people are going to be able to borrow more, and that's going to then force prices to go high. And that's what we pretty much saw towards the end of this pandemic boom that we saw in property. However, now that we've seen the interest rates go up by 7 or 8 consecutive times, we are in different waters now. We are now in a position where some people that took out loans definitely couldn't afford it back then, and now they're really struggling. Because on paper, you can basically say that you're not spending money, and then you could tighten up your expenses for like 3 months. The bank will approve you on a loan based on the income and the expenses you provided. But now some people are realizing that they sort of screwed it up because they didn't give a good reflection of what their expenses actually were at the time. Now, if we look at how mortgages are given by the banks, they usually use a servicing buffer rate, and that's usually about 2 or 3% higher than what the actual rate is for your home loan. So back then you could probably get a mortgage for about 2.5%. And when you got assessed by the bank, they were assessing you at basically 5% or 5.5%. Now that we've seen interest rates go up to 5, 5.5, and possibly 6%, you're now at what is called the terminal rate. This is basically where you're at a point where you should technically not be able to make repayments anymore, because that's what we buffered in for you. Now you're in uncharted waters, and now you should probably default on your loan. Now, a lot happens in a year's time, so your income could have improved as well, and there's a large portion of people that also fixed rates that were quite low. Now, adding fuel to this fire, if you didn't know, Phillip Lowe actually has no mortgage. In fact, he earns $911,728 a year. That's a pretty hefty pay packet for a job that he's been doing, and now effectively came out 12 months later to say, you should probably have not listened to what I said. Now, granted, in his defense, he's probably been advised of these things, but as the governor of the RBA, you should probably do your homework given the fact that so much money was printed and it was going to cause inflation. It's fairly obvious, right? Now, what's interesting is that if we actually increased rates a lot earlier than March of this year, we could probably be in a better position now, because what we could have done was, instead of front load all of these interest rates, we could have started doing it in Q4 of 2021, and then that would have flowed through to the entire year, and it wouldn't have been as harsh for some people. Now, clearly a lot of people are outraged by this, and I'm going to say something that's probably unpopular and probably going to invite some dislikes, but it's facts. It's the real hard truth, and to be honest, I'd rather be honest with you and give you some value than just to beat around the bush. Now, if you went out in late 2021 and you decided to go buy a home, and if you got approved for say $1 million, you went and spent $1 million because you wanted to buy your own home, on the basis that interest rates wouldn't move up for maybe the next 2 or 3 years, now you're underwater. You unfortunately have no one to blame apart from yourself. I know that Phillip Lowe's come out and apologized for the wordings he's used, but there comes a time of accountability. And unfortunately, just like you listen to some YouTubers like myself, as well as influencers and and the media, you can't just go on and say, well, I'm taking these actions because Channel 9 News said this should happen, and this is how I'm gonna react. In fact, in 2020, I remember a case. They contacted me and said, hey, look, I'm thinking of actually selling my property, and in about 6 months' time, I'm gonna come back and try and buy either the same property or on the same street or even an upgraded property for about 30 or 40% less. And I looked at him and I was like, what the hell are you saying? And he basically goes on to say, look, the ABC and Channel 9 have come out and said that prices are gonna fall by 30 to 40%. So I'm better off now selling because of the pandemic, and everyone's gonna get fearful and the markets are gonna crash. And then what I'm gonna do, Ravi, is I'm gonna come in, swoop in, and actually purchase a property for 40% less. It's a brilliant idea, right? And I said, well, chances are if you're thinking this, then there's probably a bunch of others thinking this, and I don't agree with it because I don't think the price is gonna fall by 40% in the next 6 months. And if you've got an asset and you're happy with it, why wouldn't you keep it? He didn't listen to me, and that's fine, except 6 months later, yeah, he contacted me again and said,
Ravi, the prices went up.
and he didn't blame himself, he blamed the media. And he said,
I can't believe they actually published this information. Based on this information, I made these moves and now I'm stuck. I don't have a property, I don't have the asset, and now I have to go rent.
and in this case, so many people are gonna go and blame the RBA for their decisions, but unfortunately, this is how life works. If you simply sit in the camp where you're gonna continue blaming other people for your decisions, it's not gonna leave you so happy. I mean, even for myself, I've followed influencers, I've followed the media, and I've done all this over the last couple of years, and I've made mistakes and I learned from them. Now what I want you to take away from this video, which is the main part of making this video, is that in 2023, we're gonna get so much fear and so many headlines that are gonna invoke some sort of emotion, and it's probably gonna be negative. And I urge you to stay logical. This is the time where you wanna be building up your asset base. You don't wanna go and get fearful when everyone else is reading the same stuff. Usually towards the end of the market or the bottom of the market is where the negativity is at peak fear. And I'm referring to prices as in the stock market and crypto, but when it comes to real estate, it takes time to actually develop and play out in that market. And I mentioned in a video, which you should check out here, exactly when I think prices will bottom out and they'll start rebuilding towards the next leg up in this cycle. The RBA has actually gone on to say that real wages probably won't grow and you're gonna be screwed over with inflation, and it's inflation's problem, and inflation wasn't created by us, it was actually created by issues in Ukraine, and unfortunately that's the RBA deflecting as well because we got here because of them as well. So if the RBA is also blaming someone else and you're blaming someone else, we aren't really being productive and making our way forward. Accept what decisions we made. I've made mistakes and I'm sure you have as well. Now we can start building towards the next leg up. I hope you guys have some insight as to what I think of the rubbish articles that get written every single week, but I hope you take some value from this video, understand and reflect on your own behavior and how you get affected by reading these sort of things. If you have enjoyed this video, smash that like button, share it with someone else that probably freaked out with the RBA coming out and changing their plans. And if you're interested in more content, subscribe. I'll catch you guys in the next one. Thanks, guys.